So, hey, what's up, guys? My name is Haya Fayaz, and today the topic which I'm going to teach is regarding lease payments. So, the first question, I'll be covering two questions. The video will be short as possible from my side. So, the first question which I'll be covering will be regarding lease payments made in advance, because this is a topic for which questions are not like too many in number in the exam kit, so I would like to cover it like once here. It's a mid-yearly question. That means we have entered into a lease contract in the mid of the year, and we are having lease payments in advance at the same time. So two complexes in the same question, so we need to find out or figure out how do we calculate this. Many people have asked me this question about how do we calculate this. It doesn't make sense and on stuff because of these two complexes. So today I would like to solve this and clear it out for all of my YouTube students. So let's start. So first, I'll start with workings. I always start with workings first, then all these things are pretty clear, right? This is an FR exam question, and I've taken it from the study text. You can find the answer there too, but I would like to explain you and solve it at the same time so that it's better, it's more clear. So first is we enter into an agreement to lease an item of plant on 1 October 20X8. Okay, clearly year end is 31 March and I have entered 6 months prior, so it's a mid-year transaction. And the lease required 4 annual payments of 2 lakhs commencing on 1 October. Plant has a useful life of 4 years, is to be scrapped at the end of the period. Okay. And the present value of the lease payments is 7 lakhs. The implicit rate is 10%. Okay. So we got all the information. This is the basic information. We are supposed to prepare the extracts of the financial statements. That means what will go in SOPL, what will go in SOFP, both are supposed to come in this. Let's start with the workings. That table, the table which is important, that like pretty much like the amortization table of loan. That's the format for this too. So year ended 31 March X9, right? And then what will come here? See, I don't like creating columns and stuff, like so many columns and stuff. I'll do something that's easy for me. So maybe I would just start with the initial balance here. Something that doesn't complicate stuff. So my initial balance would be around 7 lakhs. Yeah. So first we start with the lease liability, right? The present value of the lease payments at the date of start of the contract. So it was 7 lakhs. It's just directly given. So we'll just write it there and keep. And all of the amounts are in dollars. Please write the currency and stuff too. Right? And initial balance. Then the annual payment made. So since we are paying in advance, that is at the commencement of the lease, when the lease is starting, that time itself I'm paying it. So you are supposed to subtract it before the interest. I'll tell you how. So annual payment made is, we are just doing it at the commencement of the lease. So minus 2 lakhs, 2, 3, 4, 5, 6, right? And then afterwards, I am also paying yearly interest of 10% at the rate of, for like 6 by 12 for 6 months. How will we calculate 6 by 12 into 10% into which amounts? So it will be this plus this, right? 25,000. That's the yearly payment. And yeah, then the year-end balance would be is equal to just the sum of all this. We subtract the lease payment and we add the interest. So this is what is the year-end balance at 31 March 20X9, right? Then afterwards we will carry it forward, 5,25,000. We'll carry it forward. Maybe then if you want to write it as carry forward balance, right? CF, 5,25,000 and then we calculate the remaining interest. Now we won't subtract the payment made. We have already subtracted it once. In the second year, we won't do that, right? So we will just add the remaining interest because we already charged 6 by 12. Now remaining 6 by 12. So how is it going to be? Yeah. Now how do we do it? It's this. It's these both again. Remember that. It's on these two amounts only. Okay. Don't do it on this or this and make entire mess. You calculate the 6 by 12 on this. Now you will have to calculate the remaining 6 by 12 on this. My bad. First I should write sum, right? Sum of these two into 10% into 6 by 12. Again 25,000. That's simple. And then it should be the annual payment made minus 1, 2, 3, 4, 5, 6. That's the format, because now the next year starts. This year's interest payment is done, and this is important. Then again, interest will be charged on which amount? It will be on this plus this, right? Into 10% into 6 by 12. 16. Sorry, my bad. Actually, it's the sum of all of this into 10% into 6 by 12, right? So I will just include the 10%. I will just include this for the sake of calculation, but this is not something that's relevant to this year. This will be something that will be included in the year ended 31 March Y0, not in this year. This is just for showing you guys that how do we calculate it. Year-end balance will be the sum of all of this, right? But for my financial extracts, I am concerned with non-current liability and current liability, right? So I have calculated this well and good, but I'll add one more figure here, non-current, just for the sake of explaining you guys like that. So that will be equal to sum of this, and this. We will not add this year's next year's interest in this year's non-current liability. So just do it like that. We end up getting 3,50,000, right? So that's all about it. I'm just concerned with this amount. This year-end balance I just calculated for the sake of calculating the year-end balance, but technically I am concerned with non-current liability and then subtracting it from the this balance so that I get the current liability, which I will do further. Now I'll just create SOPL extract and SOFP extract, right? So first thing that will come is assets, because right of use asset is there for lease payments. That's pretty basic information. So we write it as right of use plan, and then we go to liabilities. We write it as non-current liability and current liability. Right? Two separate, it should be classified into two. So as per this information, it will be which amount? 3,50,000. Yes. And this 3,50,000 only includes these balances, only up to the advance payment made. Never ever include the 16,250, the next year's interest rate in this year's non-current liability. That's not relevant. I just calculated for the sake of calculation. So it is going to be 3,50,000 for non-current liability. I'm going to write it here. Lease liability, which is equal to 3,50,456, and current liability for lease liability will be this balance, simply just the last year's year-end balance minus this non-current liability which we just calculated, because obviously This balance minus non-current liability will be current liability. Like the remaining balance will be current, of course, for what we have to pay this year. So that's equal to 1,75,000. As simple as that. So for the SOPL format, it will be first starting with depreciation like because that's the format: operating expenses, then operating profit, then finance costs, right? Finance costs associated with the lease. So how much is it? Simply put 25,000, and this is a negative amount, so remember that. So cost, and depreciation would be simply put, so if the present value of lease liabilities is 7 lakhs, if that is the initial balance, that will also be equal to the right of use asset, because the journal entry that's passed for them is debit, credit, debit ROU, right of use asset, and credit the lease liability. Initially, this is the initial journal entry. So because of that, it's going to be 1 2 3 4 5 6, and same 1 2 3 4 5 6. So on that ROU, because I'm owning the asset for a while, right, until the lease contract gets over, I am owning it. It is going to come in my asset section. So I will just take this amount divided by 4, because that's the lease contract, and also that's the useful life left for the asset, because it will be scrapped at the end of the period. So this is my depreciation. As simple as that. Got my answer, right? So is there anything else left? Yes. The right of use plant minus the depreciation. Actually, plus, because I have already given it a negative sign. Okay, I did a mistake. So this is only for 6 months. This is pretty normal, such kind of mistakes. So practice such questions well, because it's a mid-year transaction. Don't forget that on the way. So as soon as I change that, this also gets changed. That's the best part of Excel, best part of using spreadsheets, and you won't tend to make mistakes. Everything will get edited on its own. So well and good, we got our answer. And now let's shift to the next question. Now the next question, which is regarding lesser accounting. I want to basically show how do we deal with lesser accounting, because in FR and even in SBR, we mostly focus on lessee, how the accounting takes place, how we'll include in the SOPL and SOFP and stuff. But a bit about lesser accounting should also be known, because that's also introduced in SBR. So as I said, as I promised before on LinkedIn, on my LinkedIn post, that I will post a question regarding both SBR and FR. So here it is. I'm doing a question related to SBR, and it's a basic question. It's an illustration that I've taken from the study text, but I would like to solve and show you guys so that it will be easy for you to understand. Because this question, when I was doing and others were doing along with me, everybody found it like tough, because it was all new for them. So I want to make it easy. That's my whole purpose. So first, this said that 1 Jan 20x1, it was sold, an item was sold for 3 million. Fair value was 2.8. Asset had a carrying value of 1.2. Okay. Sale represents the satisfaction of performance obligation in accordance with IFRS 15. Well and good. That means it's a sale according to IFRS 15. We have officially sold the asset. Now we have to de-recognize it in our accounts. Now Mosaic enters into a contract with Ceramic for the right to use the asset for the next 5 years. Okay. Annual payments of 5 lakhs are due at the end of each year. The interest rate implicit in the lease is 10%. Present value is 1.9. So how will the transaction be accounted on 1 January 20x1? So this is like initially at this conception of the lease, how you're going to account for it. It's just about that. So some journal entries and some profit on sale of this asset and stuff, these calculations are there in both FR and SBR, which you should be aware about. So let's start. So first of all, I saw that 3 million is the sale proceeds. Fair value was 2.8 million. So clearly we have sold it for something extra, some extra, right? Like it's a profit for us, or what do we call this profit? In financial terms, we call it an additional source of borrowing, additional financing, right? It's treated as that. So we have to Therefore, take the total present value. How much was the present value of lease payments? 1.9. But since we got the additional financing, we will just net it off against this 1.9 and we'll get 1.7. We got this profit, basically, just in layman's language. It's a profit. I'm just netting it off against the lease payments that I have to make. Total net lease payments, 1.9. So I'll get it as 1.7. That's it. So let me just write it down. The additional borrowing is equal to 3 minus 2.8, right? 3 million, that's 0.2 million. Therefore, the present value of lease payments is equal to the total present value given, 1.9 minus this 0.2, right? 1.7. Now, if I want to find the profit on sale of asset, this is first part of the calculation. I have to find this out for Mosaic's account. So first, what will be the situation is like that. I have made the sale. The sale is according to IFRS 15, so it does account for a sale, and I'll have to de-recognize assets in my account. I have to record the cash and stuff which I received, and at the same time, I am also leasing it. I'm also going to lease this asset after I have sold it to somebody else. So I have to recognize that right of use asset. But now, what is the amount that is supposed to be recognized for that right of use asset? The lease asset is what I'm going to calculate now. So please note the formula down. It's present value divided by fair value into carrying value, right? So it's going to be 1.7 present value of the total lease payments divided by fair value 2.8 into the carrying value of 1.2, right? We won't include this 3 million anyway. This 3 million is just the cash that we are receiving out of the sale, right? So I get it as 0.7. Let's just round it off to 0.73, right? This is the profit on sale of asset. Sorry, this is the right of use asset amount. Now the important journal entry, which is like going to make your calculation easier. There are other methods also, but that's just complicated for no reason. I found this pretty easy since my FR time. You can use the other calculation from the study text if you want, but I will just prefer this over anything. So debit cash 3 million. I'll just keep on writing with the flow. Then my asset is going, so that's a credit. Leave that. What else is debiting? Debit, what else? There's a profit on sale that I'll get at last. That is a balancing figure, so no. Then yes, debit right of use asset. Debit right of use machinery, right? Because I am leasing it out. Sorry, my bad. I'll just write it like that. Right of use machinery. So I'm leasing it out, right? So I'll have a right of use asset at the same time. It's not completely sold. Then credit the machinery. The machinery has left from my organization. Now I'm leasing it. But what amount will I credit? The carrying value. It's leaving my balance sheet in the carrying value. I had recognized it in the carrying value. So I'll write 1.2 here, right? And credit the lease liability, because of course there's a lease asset and corresponding lease liability transaction as I showed in the previous question. Lease liability is equal to 1.7. As I told, we are subtracting this additional borrowing. At the same time, we are also including this borrowing as a financial liability. That's how it is treated. Basically, we have sold it for an amount extra to the fair value. Fair value was 2.8, we sold it for 3. So we have to treat it as a financial liability. Technically, it's a profit, but we will credit it as a financial liability. And in the lessor's account, the one who has bought our asset will be the one who will have the financial asset. He has bought it on a profit. Sorry, he has bought it for his loss. Actually, it has been a loss for him, and it's been a profit for Mosaic, the lessor, the guy who's selling the asset. So for him, if it's a loss, for him, if it's a profit, for the buyer, it will be a loss. So any loans or advances that have been given by an organization will be treated as an asset, right? Let me explain you this further after finishing this. In short, this will be treated as a financial liability, this additional borrowing, and then I will credit the profit and loss with the profit on sale of my asset. So this will be equal to 3 plus 0.73 minus the sum of this entire thing, right? And we go for this calculation, we end up getting 0.63, and that is our profit on sale of asset. This is supposed to be treated as a balancing figure, right? This is the journal entry for that. Now lesser, or actually you should write it down properly. So you should write it like profit on sale of machinery will be recorded as 0.63, while the machinery will be de-recognized from ACCA accounts, right? This is how it is, and this will be the transaction that will take place in ACCA account, like that you can write or something. Then comes our lesser accounting, that is for ceramic, right? So for ceramic, it's pretty easy. There's a debit for the financial asset that I already mentioned above. If it's financial liability for mosaic, then for ceramic, the buyer of the asset, who is the lessor also now. Lessor is basically the person who gives out the asset, right? So after ceramic bought the asset, he gave it out for lease to this guy, mosaic only. So he has bought the asset for an amount extra to the fair value, which is why he ends up getting that 0.2 million, that 3 minus 2.8, 0.2 million as a financial asset. He'll record it as that and debit the asset that he's receiving. He's officially receiving the asset. Even if he has leased it out, it will be his asset. He has bought it. It's all his. He will record it in his accounts. So machinery, but at what value? At 2.8 value, right? And while he will credit the cash, because of course he has bought the asset from this mosaic, so of course he has to pay cash, right? So that will be equal to 3 million. So debit and credit are balancing out. 0.2 plus 2.8, 3 million. Yes. Remember, machinery has to be at fair value. Machinery at fair value, because now you will say we should record at carrying value, but that doesn't make sense. Why will ceramic carry the machinery at mosaic's carrying value? He will record it based on whatever he finds the fair value of the asset as, right? So that's what it should be. This is part of lesser accounting. Very simple, very easy. Now comes our yes, this 0.2, as I said, it's an additional borrowing. This is something that we need to include in these annual payments also, because we have found these present value based on these annual payments of 5 lakhs for the next 5 years, the lease contract, right? Based on this 5 lakh, 5 lakh, 5 lakh and interest rate of 10%, we have discounted it back and all of that calculation, and we got present value as 1.9. So obviously this 1.9 includes that 0.2 million, as I already explained. This 0.2 million, it has not excluded this 0.2 million, right? So that means 5 lakhs also has to be adjusted for this 0.2 million, basically, in short. If we are adjusting this 1.9, then this 5 lakh also has to be adjusted, right? It's basic common sense, because 1.9 has been derived from this 5 lakh per year. So that's it. We should just deal with that. So I want to find 0.2 divided by 1.9, or rather I'll explain it better. 1.7, which is the lease payments present value, plus 0.2, the additional borrowing, right? It's like a proportion that we are finding into the lease payments, annual payments that are due at the end of each year. 1, 2, 3, 4, 5, 6. So we end up getting 52,631. This is accounted for the additional borrowing, the additional finance out of. So this is what I will record in my liability section, the actual amount. And this will be for every year, actually. Is it for every year? It's supposed to be treated as financial liability every year, because we netted it off against the total lease payments, total liability, lease liability. So that's something that we should also subtract from each year's 5 lakh payment. Automatically it means that. So sorry, my bad about the previous part. Then yeah, how much is the annual lease payment as a result? Is equal to, I would just do 5 lakhs minus 52 and get the answer, but just for your sake, I'll do 1.7 divided by 0.2 plus 1.7, that is 1.9 total, into 1, 2, 3, 4, 5, 6. So that gives me 4,47,368, and that is how much I pay for lease every year now, after I have netted off my additional finance. See, simple thing that you have to remember for additional finance is you are netting off that profit that you got on the sale against the lease payment. That's it. So see, for me, 5 lakhs I netted off against is 52,000 additional finance every year, and I end up getting 4,47,000. My lease payments have reduced as a result. It's a good thing. So now I'll calculate, just for your reference, I'll calculate the lease payments, the balance and stuff. Like, since it's in arrears, I have already showed the question above, a question about related to advance. I want to show it in context to arrears and how Mosaic will treat the lease payments in its accounts for the year ending. Actually, the question is just for year starting, but just for extra, I'm also doing for year ending. So for year end, 31 December 20x1, initial balance was 1.7, so 1 2 3 4 5 6 7, yeah, 1.7 4 5 6 7, then is equal to 10%, which was the implicit rate. Yeah, it was a rate implicit, right? Implicit rate, and then annual payment. As I said, annual payment we have found out after netting off the additional borrowing. And finally, balance, year-end balance will be is equal to the sum of all of this. And then I'm carrying it forward. Year-end to 31, actually year end at 31 December 20x2. Then again is equal to this into 10%, enter, and is equal to minus again the same amount, and is equal to, actually I don't even need to do this, just whatever formula was applied here will be applied here too. So I end up getting this. In this scenario, my non-current liability for the year ended 31 December would be this, directly this. Why is it non-current? Because it's supposed to be, it's an obligation of the next year. So it's not like related to this year. It's a balance of next year. So totally it's non-current in this year, right? And current liability is simply put, which amount is higher, this, right? So this minus this, enter. So after subtracting non-current liability from the year-end balance, remaining is current liability. That's all. Thank you guys.